Hey, what's going on, everyone? Welcome back to another market update for Southwest Florida. My name is Rick Harrison with the Southwest Florida team down here, and with MVP Realty. And I just want to first start out by talking about what we're going to be covering today. I have some news stories towards the end. We will be covering 2023 predictions according to Zillow, Realtor.com, as well as Redfin. They made some pretty bold predictions that are going to be important for those of you who are waiting on buying, and especially those of you who even maybe waiting on selling to know what's coming in the future. We're also going to get into obviously the market updates, the local trends that are going on. But at the end, I also want to talk about what these things mean for you as both a buyer and a seller. So let's get started with the southern part of Southwest Florida. And this week, we had some huge changes in both the north and south part of Southwest Florida as far as listings coming on, really across the board, pendings and sales sold. So let's start off with the southern part. New listings went from 543 last week to 834 this week. That's up 53%. That's a huge increase. And again, this goes back to Hurricane Ian putting a pause on a lot of this stuff. A lot of people now are kind of getting to a point where they know what they're going to be doing. So they're starting to list their homes. A lot of people are moving because of the hurricane and everything that's going on with insurance as well. Solds went from 386 to 665. That's up 72%. That, again, that's what has already happened. So that was indicating what was going on about a month ago. But just to have solds go up that much, week over week, that's a huge amount. So people are still buying, obviously. Pendings went from 521 to 752. That is also up 44%. So all across the board, we're seeing this is really going up. Pendings more so have to do with real time, what's going on in the market right now. And that is probably due to the fact that mortgage rates have been coming down from their all-time highs at 7%. Inventory breakdown. We did see some gains last week. Single families went up from 5135 to 5193 this week. That's up 58. And condos also were up 63, now up to 2342, which is pretty close to all-time highs. We had a net gain of 56 last week, and we have a net gain of 121 this week. Multifamilies, we lost 10, but it's still, right around the range that it's been in. And then foreclosures, really not much of a change, a gain of 1. Northern part of Southwest Florida, Punta Gorda up to Sarasota. New listings went from 964 last week to 1446 this week. That's up 50%. So again, we're seeing the same trend in both north and southern parts of Southwest Florida. New listings are increasing pretty drastically over the last week. Solds also, same story here, 50% increase week over week from 976 last week to 1758. That's indicating what happened a month ago. So those homes have already been under contract for over 30 days now. And then pendings went from 1054 to 1598, also an increase of 51%. So as you can see, both areas of Southwest Florida are indicating that these trends are starting to pick up. New listings are gaining. Solds have already happened, but did gain for a time. And pendings are also picking up right now too, because of the decrease in the mortgage rates. And a big fear going into 2023 is that interest rates, mortgage rates will continue increasing. So people are trying to take advantage of this little dip right now. And we're going to talk about where the mortgage rates are probably going to be heading over the next couple of weeks. And then after that into 2023. So stay tuned for that as well. Right now, the inventory for the northern part, we had an increase of 66 in single family homes in the northern part. And then in condos, we also had a gain of 86. So we went from a loss last week of 36 to a gain of 152 this week. So we are seeing inventory again creep back up and more people are starting to sell again. Multifamilies, loss of 5, not much here, and foreclosures, no gains or losses. So similar patterns. Interest rates, we did see them decrease again, which is probably why pendings are increasing in both areas. They did go down 30 basis points. So, and then bank rate actually had it going down 65 basis points week over week. Mortgage applications, although they did decrease almost 2%, in the areas that we've been really keeping track of, which are the lower money down, FHA, VA, and USDAs, all increased. And refinances notably increased quite a bit over the last week, up 2%. Again, people are taking advantage of the dip in mortgage interest rates. So what's the scoop? Just these are the stories I'm going to be covering right now. The bond market, I do want to show you where the bond market is probably going to head in the next 2 weeks, going into Christmas, and then where it's going to be heading into the new year. I think you'll be pleasantly surprised if you're a buyer that's been waiting. Also want to touch on Powell's speech, credit card debt, and then housing predictions for 2023. There's some big ones being made by Redfin that are in agreement with what I've been saying over the last 6 to 8 months. So that's good news if you've been paying attention to this channel. What's it mean for you? And then also want to make some just last minute channel updates, announcements that I'll be making at the end. So first, Powell's speech last week, a couple of the highlights. Number one, obviously the signal, smaller interest rate hikes are likely on the horizon. So this next one coming in just a week or so will actually be a smaller, probably 0.5, 50% basis points. The warning, monetary policy is likely to stay restrictive for some time, so they are going to keep going. His really the highlight of his speech was they're going to be doing this until it's not necessary anymore. And then number three, expectations. Despite some positive developments, we obviously still have a long way to go, considering that the job growth report showed that we did gain more jobs than expected. So that's not good news for the Fed's objectives. Next, the credit card debt hits all-time high. So I'm going to take you over to actually the Durden Dispatch, Tyler Durden. This is on Zero Hedge. Credit card debt hits all-time high just as U.S. savings rate plummets to 17-year low. Just to give you an idea of what that looks like, we have the rate up here. It's all the way at the top, all-time high across history. And then we also have our savings rate, which is at an all-time low, the lowest it's ever been. So those two things diverging that much obviously shows that, we're, as an economy and as consumers, we're not in a great spot. Next story is JP Morgan. Consumer cash pile may be exhausted by mid-2023. So for those of you cash buyers out there, your buying opportunity in 2023 is probably going to be a pretty good time to buy, considering where things look to be heading as far as the recession, where most consumers are going to be. And then also at the same time, where the housing market's going to be. All right, so let's get into the 2023 predictions. This is according to Redfin, and going even back to Zillow and Realtor.com, they all seem to be pretty much in agreement with these three predictions. But the first one is that home sales will follow their lowest level since 2011, with a slow recovery in the second half of the year. So pretty much across the board, everybody is predicting that housing sales will slow. Just people can't afford it with the interest rates being where they are, and the fact that, as I just mentioned in the last article, consumers are running out of money, they're running out of savings, and they're probably going to be running out of jobs pretty soon too if the Fed has its way. So the second prediction is that mortgage rates will decline, ending the year below 6%. Now, I'm going to be a little bit more bold and say that I think we're going to actually see them happen much sooner. I think the Fed is going to pivot. I think the bond market is going to subside quite a bit, but we will be in for some short-term, meaning over the next 2 weeks, some short-term gains. The third prediction is that home prices will post their first year-over-year decline in a decade, but overall, they feel that the U.S. will avoid a wave of foreclosures. As far as I'm concerned, but they probably will. I know people were talking about a wave for quite a while, but we've really seen no indication, and a lot of people did try to, regroup their mortgages, and they just added on what they missed to the end of their mortgages. So, but I did want to take a look at this chart because that was the base. So their base model is losing 4%, but they have it losing up to 15% to the downside by Q3. And I think that's probably where we're going to be heading more so. And that's what I've been telling most of the clients that have been working with me, as well as, people who have asked me for my opinion. I do think we will see a 15% decline to the downside. However, we don't know for sure, and we don't know where the rates will be at that point in time. So now I want to head over to the interest rates and show you kind of what was on my mind as far as last time we talked with the interest rates, or about the interest rates. I had mentioned that I think we're going to be seeing them decline. We had the typical statistical patterns of the head and shoulders. So here's the head and here's the two shoulders. which usually indicates that it's going to decrease. And I did that last week. So if you can see right here was where we're at. We did hit a lower high, and we're probably going to be heading down to a lower low. But what this is a declining wedge or a falling wedge. And usually what happens with a falling wedge, about 70 to 80% of the way through the wedge, you will see a breakout. Now you just take the distance between these two, you measure it, and you move it out about 80%, which I think is going to be around December 15th or so, maybe the 16th, and we probably will have a breakout, which will be a new a lower high. From here, we'll meet resistance, and it will then continue down lower again. Now, these are all just probabilities, but it is showing that through the two major ones that we're looking at, which is the 2- and 10-year bond, which is what mortgage rates usually follow. So we probably will see another breakout here, and then from there, it will continue to decline. So over the next couple of weeks into the new year, we might see interest rates start to go back up again. But I think after the new year, a couple weeks after that, we will see them go back down, and they will go down quite a bit. So that's really what I'm looking at as far as where the interest rates are going. So what does it mean for you as a buyer or seller? So for sellers right now, I think just based on the patterns, you're going to have your best buying opportunities in 2023, especially if you're a cash buyer. But I think the mortgage rates will be coming down in the first quarter. So by second quarter, you should have some pretty good opportunities to buy if you can stay strong, and really, look at the different options you have in the different areas. But look for some really good buying opportunities as far as fixer-uppers, especially down here in this area. For sellers, though, if you're looking to sell, I'd say in the short term, you're probably going to there's some pain, because if you sell right, you obviously have to find something else to buy, and you're going to be buying at highs. But that's the thing with the market. If you're selling high, you're usually buying high. So it's really just a trade-off. It's more so, is this a good opportunity for you to trade up or trade into something and right-size your home? So you have to look at it that way. But as far as really the best parts of buying opportunities, I think as a cash buyer, your best opportunity is going to be in the first quarter, or from now to the first quarter, because after that, in the second quarter, when mortgage interest rates start to go down, home prices are starting to fall, you're going to see a lot more demand, a lot more buyers entering the market again, and you're going to be back into competition with them. So again, I think over the next quarter, the first fiscal quarter of this year is going to be your best opportunity to buy. But again, who knows what's actually going to happen? That's just speculation at this point in time. But follow the charts, follow the 2- and 10-year bonds. That's really going to give you the indication as to if it's where things are really heading. And again, this is just a probability with those charts. The last thing I wanted to mention is just a couple announcements with the channel. I am going to be starting finally. I finally got everything figured out with my all the people that have been talking to me, my clients. So some of that is calming down a little bit. I'm finally going to be able to start dedicating a little bit more time to the YouTube channel. So the plan is to have 3 videos coming out a week now. I will be moving the market updates to Mondays, and those will be coming out at around 5 o'clock each Monday. Wednesdays, I will now be having tips videos and other videos that are really pertinent to our area and what's going on, how you can take advantage as a buyer or seller with what's going on in the market. And then Fridays, I'm going to be dedicating to more community videos, which are going to be taking you around the area, showing you community overviews, home tours, things like that, so you can get a better idea of living and buying in Southwest Florida, what it's like, where should you be going, what kinds of communities are out there, things like that. So I appreciate, thank you, Kat, for leaving me a comment. I did see that come up. It does come up live, so I appreciate that. I will respond to you after this. It's just tough to do while I'm actually filming. But I think, you guys probably, if you've been watching regularly, you have a good idea where things are heading, and it's more of just, making sure the timing and everything works out the way you'd like it to. But if you have questions, please feel free to reach out to me directly. My contact information will be in the description. I'll also leave it in the comments, so you can reach out to me directly by phone, text, email, whatever works best for you. Also, moving forward, I will be having some special videos coming out that are interviews with experts in the field. I'll also have some webinars coming out that will cover, various broader topics like buying a home that has been damaged by hurricane or by water, building new construction on your own lot versus in a community with a home builder. So things like that will be coming out over the course of this year. So stay tuned for those as well. And if you enjoyed this video, please give it a thumbs up. Subscribe if you're looking for more information or considering moving to the area so you can stay up on all these videos. And I hope you guys took something away. But otherwise, I hope to see you guys next week. And as always, please stay safe, stay positive, and of course, stay free.